Pete, welcome back. It's another week and we've seen plenty of action around the market. So talk to me about the trading signals that matter this week going into the weekend.
Well, good morning, Will. A couple of things that we've had a Thanksgiving celebration this week, naturally. So the US will probably have very much a long weekend from a trading perspective, Friday being the day after Thursday and the day before Saturday. Now, we've had a big sell-off as far as gold also in the last week, very, very strongly pushed down. US dollars booming to the upside, nearly at 97 for that US dollar index. Euro hemorrhaged against the value of the US dollar. Aussie come under pressure. It's been a trader's, the last 10 days, that 2-week window for trading days has been absolutely electric, Will.
Pete, the summary there suggests that the dollar slices higher after a strong US data and Fed signal. We've got the euro tormented by growth risks. Stock markets are bouncing back and thin liquidity dominates trading as America goes on holidays. I think that's pretty much where it's at.
Yep.
What else is going on? We saw the Fed minutes come out, Powell renomination, the single currency piece that's sort of taking over in Europe doesn't seem to be going so well at the moment against the US dollar and the pound. Going into winter, inflation, energy, and certainly some areas that we should be watching here. What's the trading signal in all of that matters?
I noticed this week the SPR, the Strategic Petroleum Reserves, Biden took it upon himself really to rally his troops, being Japan, South Korea, India, and China, to also release strategic reserves. And those reserves are built for wartime. They were filled under the Trump administration at a very cheap price to get as much oil on board as possible in case you need to go to war. So you've got that for aircraft carriers, for Air Force, and so on. He wants to release 50 million barrels. Thought he wanted to push oil prices cheap. I don't know whether you've been to the petrol pump lately, but I tell you what, it's a lot heavier or a lot higher than what it was a year ago. Incredibly higher. What do you put in the Bentley, Will?
Oh, the Bentley's in the garage, Pete. I got the 2-rag out this morning and it was $2.18 at the pump.
$2.18 a litre in the pump. And that's, well, what do you got, 4.5? That's close to $10 a gallon. That is frightening. And this is being heard or felt across Main Street. Main Street doesn't matter if you're in India, doesn't matter if you're in, the streets of Dubai, London, Sydney, Brazil, you name it.
Cutting to the chase, Pete.
I've got to say,
cutting to the chase, Pete. We're talking about massive inflation impacting supply chain, which is forcing the cost of your groceries up. Now, that's the bottom line.
Yep, that's it. That's it exactly. I'll tell you what, everything's going up through the roof as far as all those costs. So the only thing not going up at the moment are wages.
Well, look, let's face it, and I'm not sure they should or they shouldn't. But here's the deal: the Great Resignation debate that's flowing through the market is unsettling business. It's unsettling business. It's destabilising good companies who are actually paying pretty well. So I think there's probably some other levers that need to be addressed. I mean, the fact that wages should go up, should they?
Well, I don't know. How do you afford? I mean, if your buying power is diminishing, then that's where you're being hit. You're being hit, and companies, I understand that part as far as their balance sheet and what they can afford. But if you're going to the shops and it's costing you an extra 15 or 20% than this time last year, and your wages haven't gone up, then someone's paying for it. And the person paying for it is the man on the street, the woman on the street. That's what inflation does. It crimps you, and it really impacts your buying power, and you're feeling that at your $2.18 a litre. That is extraordinary, Will.
It's a high number.
And just hang on a sec on that. We need to really crystallise those thought processes. There's many analysts out there that are saying a $90 crude handle is achievable, and many are saying that we're going to see $121 a barrel. Can you imagine if we went to $121 a barrel, up 50% from here, 50? You put 50% on your crude price and you're paying $2.18, whack $1.09 on top of that, you'd be at $3.30 a litre. You'd be 14 or 15 bucks a gallon. It doesn't pay to own a car. What do you need you need a wheelbarrow full of coal in the back of your Tesla.
Well, the flip side of that is, the proliferation of new energy options. The investment into that channel. We're still talking years away before that flows back into mainstream. So we're not going to see any short-term benefit there. Where does it go? What does it do? And how do we respond, Pete? I think it doesn't really matter where you look at it, whether it's the raw material coming out of the ground, the processing of more raw material, the refinement, and then the down into manufacturing, and then ultimately to sale, right? So somewhere in this journey, life's too expensive.
Maybe we stop eating, Will.
No, mate. Look, food's food for the brain, food for the soul. But look, signals that matter. That's what we're here to talk about, Pete. So give me the fast minute on signals that matter as we look for stock market bouncing. Well, I want to hear about currencies, and I also want to hear your view about where to place next week's bet.
I think I want to see what happens today as far as Asia and what impact that has to a possibly weak US activity tonight due to that Friday holiday sensational period after Thanksgiving. We'll have a look where gold trades because it might bounce a little bit further the upside. It really was smacked down and it did bounce. There might be a couple of dollars left in it. Crude oil, keep an eye on that. US dollar index sitting just under 97, Will. So there's that storyline, and then that softness sweeping across euro, yen, pound, Aussie dollar, Kiwi dollar, to name a few, against everything US. So it's been a wonderful 2 weeks, and the next 2 weeks leading up to Santa Claus could be a very nice rally also.
All right. Well, Pete, we might start running a few special reports as we start to see some of the themes that might play out through the Christmas period. But let's check back. Next week. We'll look for the signals that matter. We'll look for the information that is driving behavioural activity that translates to trading, and we'll watch it all come through the screens on xm.com.
Absolutely. Thank you. We'll throw a little bit of real estate news in there next week as well, as far as domestically and what impact the buyer's having in those processes. So could be a good show for Tuesday.
That's a wrap.